This is Stephen here, and we're actually going to place our first trade of the year for the US 500 challenge. Now, just to be clear, this is not for the Interactive Brokers account. The US markets are closed at the moment, so we may do a trade later on today, and we will record that as well if and when we do it. So this is for people who are using the IG index platform. Okay, so you're looking at a chart here, the S&P 500. You can see. We're down about 1.5%, 1.6% at the moment today on the futures. And this is really down, of course, to tariffs and Greenland and what's going on with that. So if you can see here, I drew the Fibonacci retracements here. You can see that the first line of support is where we were at support earlier on in the year, which is 6,500. So we're actually going to sell a put option at the 6,500 level. And this trade, by the way, guys, has a probability of profit at the moment of about 95%. And the reason for that is we're going to click on options here. We're going to click on the US 500. We're only going out to the 30th of January, which is literally, 8-9 trading days from now. So we're going to sell the 6,500 put. And you can see here at the moment, the premium on offer is 14.56. So this is a 10K account. So we're going to do a bet size of 20 on that. And I'm going to explain that now. And this is the important one. So the margin we are going to be using up here is 5,800. So it's less than 60% of the value of the account. So that's our rule for this type of trade. We keep our margin below 60% of the value of our account. And this is a 10K account that we're going to use this for the rest of the year. And the objective is to try and generate 30% return on investment tax-free. And that's the key here, guys. For residents of the UK and Ireland, this platform and the way we're doing it now is actually tax-free. So you can see here the premium on offer at the minute is 14.71. So if we're right in this trade, we'll make 20 times 14.71 in 9 days, which is going to be, let's say, just under, about €250 in profit as such. So that would be about a 2.5% return on investment tax-free in 10 days. And by the way, this trade here, it has a probability of profit of just about 95% here. So I'm going to go ahead and place the trade now. So the trade is on. This is what it will look like. So just straight away, just notice here, you go straight into a loss situation, and the profit is counted in US dollars. So when you see this profit or loss is in US dollars because the trade is in US dollars. When we exit the trade, it will be converted back to euro. But the reason you're seeing a loss here is just the difference between the bid-ask spread. Okay, that's all that is. So that's quite normal. Don't get panicked by that. We're not putting in stops or limits or anything like that. Our objective here now is really just to let this expire worthless. So in other words, what we want to happen now is the US 500 to stay above 6,500 between now and the end of January. And if it does, we're going to make €250 clear profit on a 10K account. And that's just in 9 days. It's not even in a month. So now part two. What if this starts to go wrong? Okay, so our trigger, let me show you now. If we go up to our indices, we look at our trigger here. So our trigger for this to start taking evasive action is when the S&P 500 gets to just below 6,600. So now what we're going to do, first of all, is put in an alert here. So we're going to go down to our alerts on the left-hand side. We're going to click on price alerts, okay? And you can see that there's none there. So I want to go back into the US 500. In order to create the alert on this, we click on alert on the chart itself. So we click on alert here. We're going to click on price level. We're going to go 6,600. And this is, I'm just going to put a note to myself to say roll out short 6,500 put. Okay. And that's a little warning sign for me that if the US 500 starts dropping below 6,600, I want to roll out and down. So where am I going to roll out and down to, and what does that mean? Let me go to the options chain again here. We're going to go to the US 500. So we know we've taken in just under 15 on that trade, okay? So I need to go out to the end of February now and really figure out where am I going to get roughly 15 in. And that will basically give me where my break-even point would be for the next rollout if things went wrong. So in other words, as you can see here, and this is the beautiful thing about this trade, If the US 500 falls below 6,600, we will be able to buy ourselves out of the January contract and roll it out and down to around 6,000, which is more than 10% lower from where it's currently at. And we would still be generating an additional credit again in. So that gives me a lot of confidence here that we'll be able to manage our way out of this trade. And that's why I've gone ahead and placed this trade now. So folks, if you're not clear about this, I would encourage you to go to our spread betting courses, go to the option trading one and convince yourself here or familiarize yourself here with the short put option strategy. If you have any questions on this trade, please let me know. I'm going to populate an article now which spells it out as well in greater detail. Okay, this is Stephen from Share Navigator. Any questions, please just ask me on WhatsApp. Thanks and bye for now.